Share your screen.
Yeah, I'm sharing my screen now. You can see it, yeah?
No, we cannot. I cannot see it right now. Okay, just share it. Have you shared it?
Yeah, I'm sharing it right now.
Might be network, but I'm yet to see it.
Are you serious? It's showing that it's sharing here. It said sharing this tab to StreamYard. Are you guys seeing it?
Yes, now it's showing.
All right. So please, you should share the link now to those in the group so we can start because we are way beyond schedule right now. Okay.
Okay. Okay. Yeah, let me share this thing right now. Sorry for the delay, bro.
No problem. We are waiting.
Okay. I've sent the link to the group.
Okay, you sent it.
Yes.
All right. So let's wait now for them to start joining. Okay.
Bro, let's continue. The class is being I am recording the class. You can
Oh,
hear me now.
okay, okay.
Let's
All right.
continue. Yeah.
Well, let me go on my Go chat.
Uh,
Okay. So, so you can see my screen, Abby.
yeah.
Okay. So, let me clear the chat and let's do the top-down analysis or what we'll be expecting this week on gold. So, as we all know, that gold moves from zone to zone, and then we are slightly we are bullish on the weekly time frame. I see that the market is been pumping up. So long term, we are bullish on gold, but we know that the market doesn't just move instantly. It moves and then it returns back to a zone, a point of origin. So on the weekly time frame, this is the zone. This is the zone that we can see here on the weekly time frame. This is a weekly zone because this is an indecision candle. And whenever we have indecision candle like this in an uptrend, we can stop at here, the beginning here, or the end of the week, the end of the body. So that when this new week now, it will take a long time for the price to actually get down to this point. But it's for long-term view, as Samuel Toshi will always say, for long-term view. So on the weekly, we have two levels that if the price should get back to, we should see more bullish momentum. So this is the first zone, this is the second zone. So we go down to our daily time frame. On the daily time frame, the zone that we can see on the daily time frame right now, that if the price gets down to, it may respect it and give us some bounce. This is the first zone I can see here. If the price gets down to this level, we will have a reaction from this level. And then we look after this bearish candle, we had this, we had this one, and then we had this one. So right now we don't have any form of level for the market to react from on the daily time frame. If in case it wants to go back up, we don't have any form of level here. This is the only valid level on the daily time frame that price should get back to, and then we should see some kind of reaction. And then if this level fails, then we have another level down here, which is close to the weekly level, the weekly zone that we drew. Okay, so we are done with the daily time frame and the weekly time frame, and then we'll go to the 4 hours. On the 4 hours level, we can see that we have two levels that I can see right now. After this bearish movement here, we had a bullish movement and then a bearish candle that closed inside of this bullish movement. And we know that we need like two candles to validate a zone for us. We need two candles, which is this and this, to validate this particular zone. So I can mark the first zone here. This is the first 4 hour zone I can see, and then this is the second. Sorry, this is the second zone that I can see on the 4 hour. So each level we draw, we should make sure we all actually understand the story behind each level we draw, so as to help us take our trades accordingly. So we can see that we are having a Like from even that Friday that this market fell from this point here, I knew that since if you look at the left here, we did not have any form of level that the market will actually retrace from until we get back to this point. So I just knew that we were going to have a free fall after we took the entry from this level here on the 15 minutes time frame. That was on Friday. Took the sell, so it was a pretty nice sell. And so before the level will get back to this daily zone, we should see a reaction from this 4 hour zone or this 4 hour zone. So we know that our 4 hours has been settled, and then we'll go down to the 1 hour. The 4 hours and the 1 hour are the most crucial time frames because those are the time frames that will actually determine where we trade from intraday. Because we don't for me normally I don't hold trade more than a day, you understand, or highest maybe a day plus. So it is the 1 hour that will actually determine where we'll be trading from. So on the 1 hour time frame right now, you can see that the only level we have right now on the 1 hour is this level down here because we had one bullish candle and the next bullish candle closing in that direction. So this is the 1 hour zone that we'll be looking for. So the reason why we have this 1 hour zone here is, let's say the market opens tomorrow and then the market closes below this 1 hour zone. We know that we have a range from this point to this point, a range of about 125 pips. So you know that if this 1 hour zone gets invalidated, you understand, once this 1 hour zone breaks, we may not enter instantly. You have to go down to the 30 because this week here account for something. So we have to go down to the 30 minutes and the 15 minutes time frame and make sure that the zones are actually broken very well. So that will give you extra confirmation that the zone is actually breaking. That's not gonna hold. And so if the market should come back down tomorrow and take out these levels here, let's see the 15 minutes time frame if we have any zone here. Okay, you can see that the 15 minutes zone and the 30-minute zone align themselves perfectly. So if we should get any form of movement down here like this, a break of the 15 or the 30-minute zone here, sorry, to get a break here, something like this, we can look for a retest of either this zone or this zone, and then we trade it down to this daily level that we are expecting the price to get down to on the long term. So this is the first view that we'll be looking at on gold if that 1 hour level breaks. So yeah. So let me go back to the 1 hour. Okay. So the next 1 hour zone we can see is this point here. Is this point here. So if the market gets back to this 1 hour zone and respects it, gets back to this zone and respects it, we'll go to the 5 minutes time frame and look for our entry confirmations here, and then we can take it back to this point. But if it comes back here and then fails and then goes back to retest the zone, we can now look for shorts on the 5 minutes time frame back to this zone. And then peradventure the market moves down to this zone here, this 4 hour zone, we can now move to the 15 minutes time frame and then we look for our structure on 15 minutes time frame. Either this, and then we can enter from the neckline break here and then target either this 1 hour zone or hold it down till we get to this daily time frame. So that is what we should be expecting on gold from tomorrow. Tomorrow we have the normally Mondays are how the market will unfold, and then we'll know how to follow it. And then one thing about this strategy is, you have to be very, very flexible. You don't have to be rigid about any particular direction because the market can change this trend at any point in time. So we don't need to be rigid that since we have a 4 hour zone here, the market must get back to this 4 hour zone. It doesn't happen like that. The market can go back, it can even get to this point without reaching the 4 hour zone, and then the market can reverse. So you have to take away that rigid mentality and just be focused and look at what the market is telling you. We should learn to be, we should learn to react rather than just following, a particular direction. So whatever the price gives to us, we react based on what the price has given to us, and then we trade from there. So yeah, that's how we should be. That's what we should be expecting on gold coming into this new week. Yeah, so this is 4 hour zone, and then I think we have another 4 hour zone in case the market wants to retrace back. We have another 4 hour zone here to mark out. So these are the zones that we should be looking at for coming into the new week. So, but overall, we expect the price to get down to this daily level, and then if that daily level fails, we look for it to come down to this other daily level and then the weekly. This is the ultimate direction, the ultimate point we want the price to get to, either this or this, and then that's when we can now see more bullish momentum on gold again. But for now, these are just for the our intraday trades and entries. So yeah, uh, I think yesterday we were talking about single candle order blocks. That was yesterday. We were trying to talk about single candle order blocks. For example, let me take it. Let me take out this level. This particular candle here, we can see that it's a bullish single candle order block because the wick of this candle took out the wick of this previous candle here. So qualifying this as a single candle order block. So let's say if this place now was probably a zone that you want to be trading from, yeah, your entry can be based on this single candle order block here, and then your stop loss at the zone of the single candle order block, and then you can target any level you want to target based on the structure being presented itself. So these are just examples. For example, this is also a single candle order block because the wick of this candle took out the wick. We had a small wick here, took out the wick of this candle, and then since this is an indecisive candle, you can't just enter straight from here. You have to wait for the next candle to form, which is this. So you can actually take entries here and then stop loss here. So that's how you use. Let's say this is our zone here, maybe on the 4 hour zone, and you want to use the single candle order block. First, you wait for the first leg to get to your 4 hour zone, and you want to use the single candle order block. First, you wait for the first leg to get to your 4 hour zone. Let the first leg be there, react, and then you have a reaction. Then we know that we have, once we start coming down like this, we know that we have our neckline here. We have our neckline here. And then the idea of the single candle order block is to give us better entries other than waiting for the price to break out of this zone here. So, and then once the price starts retracing back down, if you see this kind of confirmation, a bearish candle with a wick, and then you have a bullish candle taking out the wick of that candle, this is a single candle order block. So let's say in this leg now coming down, we have you have your single candle order block here. You can take your entries with that single candle order block at this point without even waiting for the price to take out this high, because once single candle order block presents itself in the market, it gives a high chances of that neckline being broken. So let's say you have your single candle order block presenting itself at this point. You can actually take your entries at this point, knowing fully well that you have 80% chance of that price actually going up to break out from this neckline. So you see that with this single candle order block entries, you have perfect entries at this point instead of probably waiting for the price to break out of the zone, and then your entries will now be somewhere like here, and then your stop loss will be at that candle that breaks the zone. But with the single candle order block entry, you can get a very good entry, and then you can now hold it from this point down up to any level you want to. So that's the first scenario. The second scenario is most times the price can come back down at this point, and then at this point, if you see your single candle order block, you can actually still take the trade, having in mind that we can actually break out. So you can take the trade from this point after the single candle order block forms. You can take your entry from this point, your stop loss at the low of the single candle order block, and then you can target the next structural level, knowing that that move now can induce us to break out of this neckline. So instead of waiting to take your entries from this neckline, once you have your single candle order block forming at this low here, after we've gotten our first reaction and then our second reaction, and then on the third reaction, then you should now look for your single candle order block. And then another disclaimer for looking for the single candle order block, you should see there shouldn't be mixture of, let's say, for example, you shouldn't see candles forming like this, going up. Sorry, you should not see candles going up, coming down, going up, coming down, going up, and then coming down. This will invalidate your single candle order block movement. Let's say you have a bearish candle, you now have another bullish candle, you have a bearish candle, bullish candle, and then you now look at and then you now see your single candle order block. That entry is not valid. It won't hold. It has less chances of holding as a single candle order block. The only way you can be sure that your single candle order block will likely hold, it has higher chances of holding, is when you have, sorry, is when you have just a straight movement like this. Sorry, I think my mouse is kind of misbehaving. Is when you have straight movement like this, maybe bearish candle, another bearish candle, another bearish candle. And at that point now, you have just series of straight bearish candles, and then you can now look for that single candle order block. For example, something like this. You have series of, let's say this was your first leg, for example. Now, this one leg, and then we had, sorry, and then we had another leg up, something like this, and then this coming back down here should be bearish candles like this. There shouldn't be a mixture of bearish, bullish, bearish, bullish. It should be a mixture. It should just be straight bearish candles like this. And then at this point, and then you know that we have our neckline here at this point. We have our neckline at this point. So in this case, once you see this kind of candle form, when you have your one leg up, one leg down, that means you're looking to buy. You have one leg down, one leg up, another leg down. This down leg should be bearish candles all through. And then once you see your bullish single candle order block like this, that's when you can now comfortably take your trade from this candle. Or if you actually want extra confirmation, you have to wait for another candle to close bullish. So if you don't want to take your entries here, you can actually take your entries here, and then you put your stop loss at the low of this single candle order block. And then now you can now know that the price has a higher chances of actually breaking above this neckline here. And then you can now target any level you're trying to target instead of waiting for all these moves to happen and then breaks here. Then this is where you start looking for your entries. You can get an early entry at this point, or even at this candle here. You can get an early entry here, stop loss here. Then you can wait for the ride until it breaks the neckline zone. So that's how I use this single control order block. It's a very powerful concept. It gives very good entries if you actually obey the rules of it and then trade with it well. You would actually see the benefits of using the single control order blocks. It gives way more perfect and good entries. So yeah, that's what we look for at gold. Question or something. But you guys can hear me, yeah?
Yes, sir.
All right. So I don't know if there's any question to be asked.
Yes, I have question. I'm coming.
All right. So go on with your question.
I'm coming. I'm connected to my laptop. Is echoing.
Oh, all right, all right.
Sir,
If you connect
Yeah.
your laptop, you off
you,
your phone so
uh,
that it will not be.
okay, because I'm using my phone to do the mic. Because my laptop is not working. Okay,
Oh,
sir, you
okay.
said that when it gets to a zone that you'll be seeing that type of
And when it
pattern,
does what?
W and M pattern that is going to that zone is going
Yeah.
to. Is it when the price
Yes.
wants to respect a zone that is going to form that pattern?
Yeah.
Because or when it's
Exactly.
break, like if you don't respect the zone. Okay,
Okay.
when
You know
it's
what?
respect the zone that we're going to see
Let's
that
say
type of pattern.
yes. Let's say the market now. You probably want this zone now to hold. Maybe this is a zone that you're expecting price to get to, and then the price, and then this particular zone will. Okay. You know what? Let me just show you from the example of yesterday, from a Friday on 15 minutes time
Okay, sir.
frame, because we had a 4 hours level here. That was how I got that for that trade. That was on here. This was the 4 hours zone I was waiting for the price to get down to on Friday.
Yes, sir.
So let me take out this level. So let's go down to the 15 minutes time frame. You know that once the price get to your 4 hours zone, you go down to the 15 minutes time frame to look for your entries. So we had we had this was the 4 hours level. So this was when the price got back to the level. But I don't add like me for me that Friday. This was where I had my first entry. I didn't wait for, but it's always very good because this one is kind of a risky entry, but it's always very good that once price comes to your zone, you should look for your double your if it's a sell, you look for your M pattern. So the M pattern can be like this: one leg up. Make sure that the first leg up must touch the zone, must touch this your zone. It must touch the zone, and then you look for another leg down, forming the neckline, and then the next leg can come somewhere here, and then it can come down and break your neckline. So we have this form of pattern. The second pattern is the first leg must touch the zone. Then we have a retracement forming the neckline, and then the next one will probably go above this somewhere here, and then you look for your any form if you're looking for the single candle on that block at this point, you can look for it if it forms, and then you enter, and then we have this. So these are the type of W formations we look for in this zone. So it can be in this form, it can be in this form, or it can be in the form of equal highs. It can be in this form, sorry. It can be in this form where they are equal. It can be in this form. So that's it.
Okay, sir. Sir,
Yeah.
you said single order block is getting interesting with the single order block to add to our complexes. At this zone that it form a
Yeah.
WMA pattern, like the single order block, this is
Yes.
the leg of the candle that form bullish. This long high momentum of this
Yeah.
bullish. The
Yes.
week
This
came
was the
out,
first leg
but
that this was this
yeah,
was the
that's the
first
first
leg
leg.
that
Yeah.
formed it. You understand?
Yes.
That's the first leg. So but me, I don't advise you looking for single candle like other block at the first leg. It's always good that you wait for the first leg to form, and then it should give you a neckline. And then on this second leg now that is forming now, on this second leg, that's when you can start looking for your single candle on that block. On this second leg,
Okay, sir. Sir, that second leg, the single order block there, can you just show example? Because I'm just seeing a week. I'm not seeing the other candle week breaking above the other week because it's somehow bearish. Also, can you explain that second leg order block?
Anthony, can you hear? Can you hear him?
but single candle to this bearish candle, and then this week took out.
Um, I hope you guys can hear me. Can you hear me?
Yes, sir. Yes, sir.
I think he's not online right now. I think something happened. I think something happened. Okay, he's back. Let me connect him. Yeah.
You can
Anthony,
hear
you
me?
can share your screen.
Yeah. All right. All right. But you guys can
Yeah.
hear me, Abby?
Yes.
All right.
You can share your screen. And some people have a question here. This is number one question. Somebody is
Okay.
asking. I think you can see the question.
Okay.
That one I marked there.
Can you see
Elijah.
my screen now?
Yeah. Let me show it. Let me add it for them.
Oh,
You can see
all
Elijah
right.
question.
I will check it out. Like I will check it once I'm done
Okay.
explaining this one that this guy asked.
Okay. Okay.
Yeah. So I was saying that I took the first entry here after we had this single candle order block at this point. This was where I had the first entry because I understood single candle order block, and then my stop loss was a bit above that candle, and then I think I went for a 1:2 for a 1:2, yeah, and then I closed the first trade, and then we had neckline break at this point, we had 15 minutes neckline break here. So this was the second entry too, and I still closed at this point. Then my stop loss was here at this point. And then since I knew that we had news, I think by 1:30, and from here till this point here, this zone is still valid. So I had my other blocks marked out at this point. So this was where the news. I got the third entry, and then the news. Then my stop loss was above, and then I held it. So I think I closed at this low here, this 1 hour low, or 15 minutes low. This was the point I closed. But yeah, it's the same. So once the price gets to your zone, you wait for an M pattern to form, which it did form here. We had our first leg up, our first leg down, then the second leg. This second leg now, if you want to use single candle order block for the second entry, once the price starts going up, we must have bullish candles all through. After you have your bullish candles all through, you can now look for that single candle order block, and then you can now take your entry from this point, knowing that the price may likely have 80% chance of breaking below this neckline. So instead of entering from here and then your stop loss being here, you can enter from this point here, from the top here, and then you can hold it till any zone that you want to hold your trades to. So that's how it works. So let me check the other question. On the daily time frame, two candles have closed below the candle that made the new high. Oh, let me check. Okay, the question is it on the WhatsApp group? Can you guys hear me?
No, no, it's not on the WhatsApp group. You can see it on your screen. Elijah now. You can see question there. It's the single.
Elijah. What I,
I pin
what I'm
it. I
seeing
pin it.
here is from. Okay, you pinned it.
Yes, look at your screen. You will see it. Are you not seeing it?
Okay, I'm looking at my chart now. I can't see anything on my chart. The only thing I can
Elijah.
see is from Addicted and from Bolu.
Okay, look at your screen.
Okay. I can see. Is the
Yes,
single
that is,
candle order block 80%? Is the single candle order block 80%? What I mean by 80% is that it has like 80% chance of playing out whenever it forms. That's what I mean by 80%. Like it has a very high win rate whenever it forms, and then whenever you trade it correctly, it has 80% win rate from back testing and all that I've done. It has 80% win rate once you follow the principle. I mean, once you have the first leg, if you're looking to sell, once you have the first leg forming like this, and then the second leg forms, giving you that neckline confirmation. So once the price starts going up, and then you have your neckline at this point. This for Elijah, and then you have your neckline at this point. So now this one are forming the second leg now here. This one forming the second leg now like this. It should be bullish candles all through. There should not be a mixture of bullish, bearish, bullish, bearish, bullish, bearish, bullish. Once it occurs like that, it invalidates the strength of the single candle order block. It invalidates it whenever you have that kind of candle like that. Alright. So the movement should be bullish candle all through here, bullish candle, consecutive bullish candles. And then once it gets to somewhere here, you can now look for that single candle order block. Or even if it breaks above this high, you can now look for your single candle order block. And then once it forms, you can now look for your entry, knowing that you have 80% chance of the price actually coming down to break below this neckline here. So you can get a good entry here instead of actually waiting for the price to take out this neckline. That is why the SCOB, we call it SCOB. We call it SCOB. Let me increase it. We call it SCOB, meaning single candle order block. That's the meaning of this. SCOB, single candle order block. So you can look for it somewhere here, and then you can now take it down to this point. So instead of looking for entries at this point, you look for your SCOB at this point, and then you hold the price down, and then you hold it to your zone that you are actually looking for. So yeah, that's how it works. So any other question? So
Yeah,
do you
there's another
do you
question.
okay? Do you use it in all time frames? It's likely like it's most powerful when you use it on the 15 minutes time frame. You know that the higher the time frame, the higher the the chance of any this thing working very well. On the 5 minutes time frame, it works though, but you have a lot of fake outs. But on the 15 minutes time frame, it works perfectly on the 15 minutes time frame. Once you combine it with once you get to a 4 hours zone, and then you now go down to your 15 minutes time frame and see that kind of SCOB, it works very well on the 15 minutes time frame. On the 5 minutes time frame, it works too, but just that on the 5 minutes time frame, since it's a smaller time frame, so you have lots of noise and all that, and so it still works, but the chance of it working very very well is on the 15 minutes time frame. Whenever you have your 4 hours zone and then 15 minutes time frame, you look for the time, you look for this for the SCOB, and then you take your entries. It works very well on 15 minutes time frame, and even on the 1 hour time frame. On the 1 hour time frame, it works very well. And then me, I only take this on the 1 hour time frame whenever the price is reacting from a daily time frame. So let's say we go down to the daily time frame now, and then we have, let's say, on the daily time frame, the price gets to the daily time frame now. I can go on the 1 hour time frame now and look for that W pattern with single candle order block, and then I can now take the trade. I think at this point, something like that happened at this point. Let me let me clear the chart and let's go down to there. Let me show you what I mean. This on this day now that we had this reaction from this daily supply, this daily zone. At this point, let me go to the 1 hour time frame. So you see what I was saying? Something like this. So we have two forms of entry. We have one leg up, one leg up, sorry. Then we have the one that can stop here and then we move. We have this, and then if you can see, this pattern was the one that formed on this daily zone. We had very, very crucial. And then we had this two bullish movement, and then we had this bearish movement here. And then we were looking for the price to take out this neckline here. This neckline here. So you can see you can see it working here. So now, instead of waiting for the price now to actually break this high here, and then you entering from this high here, you can see that after we had this bearish candle, this other bearish candle, we had an STOB at this point. You can see this candle wick took out the wick of this candle. It took out the wick of that candle. and then we close bullish. So this is where you take your entry here, knowing fully well that once it forms, the next candle we have a higher chance, 80% chance of us breaking above this neckline. So you can take your entry from here straight, your stop loss at the low of that candle, and then since we trade from daily to daily, you can target the next 1 hour zone or the next 4 hour zone. You can target this point, this 1 hour zone here for a 1:4, or you target this next 1 hour zone here for a 1:5. Very simple, because we were reacting from a daily time frame. So you see that's how we use the FPOB. It's very, very powerful. It's a very powerful concept. So any more question? Can you guys hear
You
me?
can see this one here. Can you see this question?
I'm coming. Let me check. Okay,
Okay.
the single candle order block must be a wick and not a full body candle. Yes, yes, yes. It must be, the candle must clear the wick of the other candle, not the body of the candle. Take out the wick of the other candle. Let me go back to the 1 hour time frame and show you that example that we used. I think I'm having network difficulties here. That's why my screen keeps frozen, keeps freezing up and down. It must be, so let me clear this. Yeah, something like this. Yeah. The candle wick must take out the wick and not the body. It must take out the wick of the previous candle. Must take out the wick of the previous candle. This candle now is the single candle order block because it took out the wick of the other candle and then it closed bullish. Another example is this. You see, in this case now, this wick also, this bearish candle, this bearish candle, the wick of this candle took out the wick of this candle here. Took out the wick of that candle. But since it still closed bearish, it didn't close bullish. So in this case, I don't advise anybody to come and start buying from this bearish candle. Yes, quite all right. We've had our SVOB at this point. But what will validate this thing, this SVOB, is if this candle, after taking the wick, it closes bullish, not bearish. So after this formed, you can now take your entry now. You have to wait for the next candle now to form bullish. You can now take your entry on this next bullish candle, but your stop loss will still be at the low of that SVOB candle. This is another example of SVOB. You can see that it's everywhere. Like whenever you're in an uptrend and then the market keeps forming this, you can even take that as an entry confirmation and start entering more trades too, except if the trend wants to reverse. Except that, you see, in this case, this candle here, the wick took out the wick of this candle, and then it closed bullish. You can have your entry at this point, your stop loss below here. You continue your buys. That's how it works. You can see that in this case, we had one here. This one took out the low of this, and then we had that bullish movement. This one too, the wick of this candle took out the wick of this candle, but it closed bearish. So this is not where you should be looking for your entry. You have to wait for the next candle to close bullish before you look for another entry. In this, you see this case now, this particular candle, the wick took out the wick of this candle. You can have your entry here, your stop loss here, continue. In this case too, the wick of this candle took out the wick of this candle. It closed bullish. You can then have your entry here, your stop loss here, continue bullish. You see this one too, the wick of this candle here, took out the wick of this bearish candle, it closed bullish, you have your entry, and then your stop loss will be at the low of that candle. Then you can target anywhere you want to target it to. So that's how SPOB works. Any more question?
I don't think so. I don't think so. I don't
Okay.
think so.
So
Um,
so I think,
yeah.
yeah,
Thank you so much for this wonderful class. We really appreciate. And the thing I wanted to ask is,
yeah,
you are doing this one. This
yeah.
is it a single candlestick order block bar? This single candlestick order
Yes,
block
yes, yes.
is an additional confluence that you normally use to take
Exactly.
your trades. You get?
Exactly. Instead of waiting for the neckline break to occur, once the SPOB occurs, I just take the trade, knowing that I have 80% chance of the price actually going up now to take out that neckline. So I don't actually wait for the neckline now to break. Once I see the SPOB, I take it's just an additional confluence, and then it gives me more risk to reward ratio. Just like
Okay,
that.
okay. The thing I'm trying to say is that I know
Mm,
why I'm asking is some of us are
yeah,
asking some questions that this is not what they taught them in that Sametochi Empower class. So I was
class.
trying to let yes, I
Oh
was
yeah.
trying to let them know that this one is an additional confluence that they can add and execute their trade. So it's not something that is different from what they taught them.
Yeah,
So
it's not
yes,
different. No, it's not different because the markup that we did, we said that we did the markup the same way. It was when it came to the entries that we now started, you know, incorporating this SCOB to give them additional confluence and then additional entry criteria, so they can skyrocket their win rate too and their risk to reward ratios.
okay, all right. Thank you so much.
Mhm.
So
No problem.
um, we have another person. I don't know
All
whether
right.
he's available right now.
Okay, Kem Diaby.
Yes, Kemji. I don't know if he can hear me. He said he has already uploaded the video he made
The video.
on the
Yeah.
yeah. But he wants if anybody has question to
Has
ask.
any questions?
Yes, the person that
Okay.
is coming to clear the questions. So I don't know whether he's still available.
I
I'm
don't.
available. Good evening, all.
Okay,
Oh,
okay,
yeah. Good
okay.
evening.
If
So
you
let me
have
stop
question,
sharing my screen then.
all right, all right. So
Mm.
if no, leave your screen, leave your screen,
Yeah. Okay. Okay.
yes, leave your screen. So if you have any question now on that video, Kemdi posted on the group, you can now ask. He's here to clear you guys if you have watched it though. But if you've not watched the video, you you just let us know so that we can end the class for now. Maybe next time we will now talk on how to mark zones. No, this one is just we just bring the we just made a total analysis what the market is going to do next week. Okay, this week I mean to say.
Yeah.
So
Yeah.
next time we are
This week,
going to
yes. Mm.
yes, next time we are going to concentrate on we will now check if we have some people that did not get the strategy very well, we now start from there to
Mm.
teach them.
Know how
Even
to
I,
help them.
I can see some of them are complaining how to mark zone and how to identify their neckline and F and R zone, how to
Neckline.
mark. Yes. So I can now
Okay.
we can now schedule
Our
another
next class.
yes to teach them specifically on that. You get
All right. All right. That's a good idea. That's a brilliant one.
Yes. So
There is a yeah. Sorry for interrupting. There is a
yes.
comment from taking over on the he's
Okay.
asking that on a bullish movement, what if a
Yeah.
single order block happens and the color of the candle is red? Is it valid or not? From the explanation that you gave, is not valid.
Yeah.
I just wanted him to
At all.
understand that it's not valid.
Okay. Yeah. Yeah. It's not. It's not valid. It's not valid. The candle has to be bullish for it to be valid.
So I just wanted to understand that the, some people are confused sometimes about these colors of candles, the green
Candle.
and the red.
Red.
So you know that they are novice in the group and they are also experienced traders.
In the
So
group.
for taking over, any candle that is red is a bearish candle. We call it bearish candles, and the bullish candles are the green ones. So in that single order block, we're not looking for red uh, pin bar candles. We're
Yeah.
looking for the ones with green pin bar candles as continuation.
Exactly.
Yeah. Yeah.
Continuation. Yes. All
Okay.
right.
Then thank you so much. So I
So
am. I
it's been
have.
insightful.
Okay. I don't think that they've watched that video that you post, Kemdi.
The video is a bit lengthy because I had to cover up to four pairs. Euro USD, GBP USD, USD JPY, and I had to add the XY. Um, I touch strategy, but I also put extra confluences. What I added to, because it's what I do personally when I trade currency pairs, I add extra confluences to what I already know based of the knowledge I have
Okay.
trading forex markets. And one of the confluences I added in the video was the fundamental aspect of trading, because
Trading.
it's something
Okay.
that a lot of people overlook, but it's
Mm.
something that sometimes gives us big losses. So I had to like draw attention to that first off.
Attention.
Then, yes, I draw attention to that first off. I went to the XY, which was the strength of dollar, because everything that is tied to USD, whether in Bitcoin, crypto, whatever market, so far as USD, it's also good to know
Exactly.
the strength that where dollar
Of
is,
the
the tone of dollar.
XY.
Yes, if it's bullish or it is bearish, it's a confluence. When we have this confluence, knowing that it's bullish or is bearish, it's just an extra seasoning, and it helps with flexibility.
Additional confluence.
In
Yes. True. True.
yes. So when you
Exactly.
really know that, okay, this is the
Exactly. Because
direction that dollar is already, then we know that this is what we should be expecting. But if we're not getting it, we can look for other confluences to take our trades. And the reason why I had to touch on the YXY was because it touches gold, it touches currency pairs, and other
yeah.
other things that start to USD. Well, there is something I noticed this year with the XY, and I talked about it in the video, but it might be lost, so I'll address
Okay.
it here. The XY tend to move inversely with gold and all any pairs that is tied with USD. But for gold and the XY this year in particular, in fact,
Yeah.
since October, since October
Mm.
last year, it has not been moving inversely. And there are two reasons for it. The first one was the war that broke out between Israel and Palestine. It was
Yeah.
a
Palestinian.
war. Yes, that war. Because when the war
Mm.
broke out, gold was still at 1,900, around
Mm.
1,800 to 1,900 October last year. And then it shoots up from there. And we have not seen that region ever again. And
Ever.
geopolitical tensions, like the tension between Iran and Israel, is what
Yeah.
is pushing
the price of gold higher and higher, because when there is events like war, people don't want to risk their assets. They want
Need the
to
asset
save
anymore.
the
Yeah,
asset. They want either to save the asset by buying gold or silver, or they look for
and buying gold
currencies
and
that are called
storing it.
yes, or they look for safe haven pairs like the yen
Like
or the CHF.
USAJY.
And
Yeah,
thank you. And they invest in such kind of investments. So I had to touch
true.
this because when you know all these confluences, it tends to like help you to have more flexibility across the market. And that is why if I am trading gold right now, I just use the Tochi's strategy because it's the best for flexibility. But if I'm
Exactly.
trading
It's
currency
very
pair,
flexible.
yes, if I'm trading currency pair, I will have to put the XY into the mix because
Other
those ones are not
confluences.
affected by war and geopolitical tension. So I had to put it. So since I was analyzing currency pair, I could not miss it. I could not just dive into the strategy. I had to like give out those extra confluences so that people don't get lost. There are a lot of things I wanted to talk about or discourse, especially as a forex trader, because I I swing trade, I day trade, I scalp. So whatever the market is doing, I always react to what the market is doing. So there are some setups that gives us swings opportunity, that gives us day trading opportunity or scalping opportunities, and there are different concepts to all these things. So
Mm.
part of what I use to like analyze and make my decision when to buy or sell is a mixture of everything that I've learned from swing trading, day trading, and scalping. Once I see the perfect setup of the three combo, I don't miss them. And if it's a swing along it. So there are different things. So one of them is like one of the topic to touch is fake outs, and that topic to touch is body retracement of a candle, and another topic to touch is body closing. All these things are really really important, but we tend to neglect them. But I so
Yeah.
much love what you did with the pin bar, because I've been seeing that a lot. I've been seeing that a lot,
In
and
the
yes, I
market.
have taken some trades on that, and I had like yeah, I
Based
had
on that.
successes. I had successes on those trades, but not like pay really attention to most of. I just like
So it,
if I see that pin bar, I did not like the way you explain it. Like it has to take out the low, not the body. That was what I was not paying
yeah.
attention to that part. But now I now know how to do it better and when to
Okay.
do it better. So I thank you for that. So I believe that as the class progress, we will touch all these things. And for the video,
Touch
uh,
more. Yeah,
before I will,
definitely.
uh, before I will explain everything, I looked at my screen and it was an hour plus. So I apologize to everybody. I will try to make it short next time. No much talk. I'll just dive into the whole thing and give people my analysis. And there was something I forgot to say in the video. The video for this giving my bias for this week and for the month, the possible direction for the market. I'll be making another short video to also give the opposite of those setup, because trading is all about flexibility. So that is one setup. The video I just dropped has one
Yeah.
possibility. Also have to look at the opposite possibility in case we don't get that setup we're looking at, so that we
That's it.
don't yes, so I was not stranded when the
Yeah.
so I'll be doing the
I
other
think
video
when
later.
your
Okay.
I think when your laptop comes on, it will be better. It will be better like to actually show us on the screen, like show us live. Than you understand where
Yes,
everybody like, asks you questions and then you answer based on what you're doing at that time in particular. So it will be better if you're actually sharing your screen and then showing us and all that. That would make more sense for us.
all
You
right.
understand?
I'll work on that.
Yeah.
I'll work on that.
No problem. We'll be expecting that very soon.
So thank you all for this. For all those who took their time, I really want to appreciate everybody. With these little things, you do these little things, you will see massive change. By the end of this week, you will print. You will
Exactly,
print.
bro.
And those
Exactly.
that
We'll
want to
print
do
a lot.
small dorime will do what they want to do. But if we print, this is just a confluence. So we learn, we learn. Nobody knows it all. We
At
are
all.
always students. So you always learn something, even from a novice. There's something to be learned. So just
So to be learned,
follow
I'm
the
telling you,
process.
true.
Follow the process and you will get what you want.
Definitely. With God on our side,
All right.
I wish everyone a very successful trading week and a very
Yeah.
sumptuous pips to be caught this week from gold.
It's NFP. It's NFP. Better to the
Yeah,
meta.
NFP week.
Go hard or go home.
Go ahead or go home. All
All
right.
right. Thank you
Yeah,
so much.
yeah,
Thank
Minister,
you
thank
for
you so much. Thank you.
thank you everybody. Thank you for
No
watching.
problem.
Thank you for coming to learn. All right. So I will still schedule another class. Maybe by that time you set up your system. You
Yeah, system, yes.
Yeah. So all right. See you guys later.
All
All
right.
right. Peace out.
Thank you so
Please.
much, guys. All right.